Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, so look, the grind continues. It's pretty simple. We grind up, it just continues to grind. When we talked Friday, we had the matching lows at 2764.25 from Thursday. Those held, and we mentioned the bulls needed over 2800. Well, now we're over 2800, and they dipped it back to about 94 last night. I know that because I had a 10-handle runner on my 27.85 half long from Friday afternoon that they came and stopped out, and then they just went right back to where it is. And we're trading on the highs right now at 28.07 and change. So we just continue to grind to the upside. If the bulls can establish 2800 as support, basically survive the day with 2800 as support, then what that is going to do is give them free reign to test out some of these other peaks. We talked about this last week. We talked about 2814. We talked about 2817.75. That's, those are very reasonable destinations. 2814 is 6.5 handles away from where we are right now. And, you're looking here back from December the 3rd. This is where it all started, right? 2814 to 2316.75. Well, we're 6.5 handles away from coming all the way back. And, it's not a V, but it's a check mark and a grind higher, and it's just a grind. And the hard part about a tape like this is it's easy to fight price if you let yourself fight price. It's been very easy to say, well, it's overdone, it's overdone, it's overdone. It is overdone, but it doesn't want to go down. So those are two separate questions. Market can be overdone. Overbought markets stay overbought. And this one has been above the bet the house area for over a week, going on 2 weeks now. I haven't seen that in years. But does that mean we just automatically short it, close our eyes, sell it, and walk away? No, that would be an incredibly bad idea because the market doesn't want to go down. It needs a reason to go down. In a vacuum, this market's going to go up. And until you get a reason for it to go down, it's just not going to. And the sooner you accept that, the much easier your life gets, because your life is about buying dips. And until something like the 9-day here, the blue line, converts itself to resistance, there's just a lot of dips to be bought. You can be short, but those are trades. Those are trades. And understand, if those trades don't work out immediately, all the weak hands that are in there with you are going to bail out over the side, and you're going to get a higher high. It's a grind 'em higher tape. Slow grind to the upside. All right, on the hourly chart, your new weekly pivots here at 27.85.83. Really had no interest in doing last week's weekly pivot down at 52. Here are the matching lows at 64.25 that got the current party started. Once we got into Friday, it was just a move up. So we gapped up, they came in, filled the gap, and then they continued to grind it to the upside. There's not a whole lot of nuance I'm going to give you here. It wants to go higher. Dips are buys. Until the bears can convert meaningful levels, starting with 2800, hourly midband wouldn't be the worst idea to turn that into resistance. You want to buy the dips because we're going to head higher. It's really not any more complicated than that. We as traders make it complicated because our brains get in the way. Okay? All right. That's all I got. Join us Instagram live 9:20 in the morning. We'll set up the open, and come check us out. If you're struggling in this tape, if you just keep saying to yourself, I just can't buy it, I'm this, I'm that, get out of your head. Come see us. We would love to meet you. Take care. Trade them well. See you at 9:20. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.